Welcome to Spidell's California Minute. I'm your host, Catherine Zidane, and this week we're covering more questions and answers regarding California's new pass-through entity tax. First, I want to say thank you and welcome to the new listeners who signed up this past week during our listener drive to benefit the Salvation Army's anti-human trafficking Safe Home. We're getting a great response, and we'll be continuing the $5 per new listener drive through the end of September, so share the email with a friend who may want to join. The enactment of California's pass-through entity tax workaround for the federal $10,000 state and local tax limitation has generated an enormous amount of excitement and confusion. Every day, our message board is flooded with questions for which there are no answers yet. The FTB has added a page to their website that has very basic information on the pass-through entity tax, including the forms that will be released at a later date. To access this page, go to ftb.ca.gov, search for AB 150, and click on the first link to Pass-Through Entity Elective Tax. In addition to the basics that we covered in our July 16th podcast, here are a few things we know. You'll be able to make the payment prior to December 31st, 2021 to ensure a deductible payment for the 2021 tax year. The FTB plans to have vouchers and forms available to make the payment in November. It appears that the credit will not reduce regular tax below tentative minimum tax, creating an AMT problem for some taxpayers. And you can't pay more or less than the 9.3% of estimated income, so you can't make a bigger payment to cover other taxes. Here are some questions we don't know the answers to yet. How do you pay the tax? As stated above, all we know is that the FTB will provide vouchers and forms before December to make the payment. For 2022, the law requires a June payment equal to the greater of $1,000 or 50% of the prior year payment. But what do you do if you expect the entity's income to decrease in the subsequent year? What will happen when taxpayers underestimate or overestimate their tax liability? What happens if a return is later audited or amended and the taxable income amount is reduced? How will the tax be paid for owners of multi-state entities? How will the other state tax credit and non-resident withholding work? And finally, does a single-member LLC partner or member or shareholder disqualify the entity from making the election? We are analyzing the law, looking at other state programs, and working with the FTB to get answers to these questions. When we have them, we'll be conducting a series of webinars. We don't have dates or times scheduled yet, but we'll let you know as soon as they're available. Also, those who have registered for Spidell's Federal and California Tax Update webinar, and those who took the Critical California Tax webinar live or on demand will continue to receive updates and already received an example of how to compute California third and fourth quarter estimates. You can register for the Federal and California Tax Update webinar today at caltax.com. That's all for this week. Join us next time for another episode of Spidell's California Minute.